There you go.
Facebook's up. YouTube's going. There we go. Pretty crazy.
Just swimming through all the crazy changes, shifting left to right. Oh my gosh, the market's crashing. Oh my gosh, people are unemployed. Oh my gosh, forbearance. With all this shifting in the market right now, what is going to happen to the housing market? Everyone is saying, with all these changes happening right now, is the market going to shift? Is it going to go up or is it going to go down? What's going on, guys? My name is Minh with What's a Mortgage. Welcome to our channel. The goal of our channel is to educate, empower, and to connect you with the right mortgage. If it's your first time tuning in, do me a huge favor. Hit the subscribe and notification button so you're notified every time we go live or post new content. We go live Monday nights at 9 p.m. and we post content daily on Facebook, Instagram, and TikTok. So if you're not following us on all our other platforms, definitely do so. Also, guys, this is an interactive channel, so ask a lot of questions. If there's any doubt, please ask. All right, guys? Hopefully you guys are having a great night. Tonight, guys, we are going to talk about the shift in the economy. If anyone tells you the economy is not shifting, it is full of you know what. So the economy is shifting, right? The honeymoon is over. All the free money is coming to an end. Everyone is borrowed to the hill when it comes to credit. And now the economy is starting to shift. And tonight we're going to talk about that. If you have an opinion about it, please bring it up. Okay? So there's been two main headlines in the news, and I just want to attack the elephant in the room right away. Of course, we all know about Wells Fargo, but not a lot of people know about Citigroup. Okay? So let's talk about Citigroup. So Citigroup cut off the $495 a year prestige card. It's like the American platinum card, right? So Citibank all of a sudden last week decided to no more applicants. Did they shut down the credit lines? No, they're just not taking new applicants with the prestige card for the prestige card. So you can still get other cards through Citi, you just can't get the prestige card, which is their very top card. Okay, what does that tell you? That means for some reason, Citigroup does not want to lend to people with a lot of money. Wouldn't you want to loan money to someone who has a lot of money, who has a great profile? For some reason, Citigroup has decided, you know what? No more applicants. If you do have a credit card with Citigroup, a prestige card, your card is still 100% active. Have they cut your limits? No, they're just not taking new applicants. So that's one major thing in the economy that's happening right now is why would Citigroup, right, largest bank in the world, all of a sudden stop letting rich people borrow money? Same thing with Wells Fargo right now. I don't know if you saw last week, Wells Fargo has cut off credit lines, not personal loans, not credit cards, not home equity lines of credit, but personal credit lines, right? So to get a personal credit line through Wells Fargo, you would have to have a large net worth. They would underwrite the file because they're loaning you the money with no collateral, low interest rates, but no collateral. So they decided last week as well, or the week before, to send out a message to everyone who had a personal line of credit and decide to, hey, we are shutting down lines of credit. So right now, Citigroup, same thing with Wells Fargo, have decided not to loan money to rich people. When I'm talking about rich, I'm not talking about middle class, upper middle class. I'm talking about the rich, right? I see one of the reasons why they're not doing it. If you look on the stock market right now, right, there is more margin accounts. It's pretty much lent to the hill right now, right? What does that mean? So if you want to play on the stock market on a cash account, you can do that all day long. But how rich people make money, they draw from where they can borrow money with the lowest interest rate. And then they take it and they put it into their brokerage account, which gives them more collateral, right? So whatever interest they're paying on that money, it's pennies on the dollar, right? And then they're making the money in the stock market. Okay, but so they're borrowing on margin. They're getting a credit line through Wells Fargo, or they're borrowing through credit cards through Citi, and they're taking the money and they're taking it out and they're just investing in something that's paying them more money than it costs to borrow the money. And that's how the rich get richer. If you want to know how to become rich, it's OPM, other people's money. People who are wealthy never use their own money. Okay? Like Jeff Bezos owns less than 10% of Amazon, right? Think about that. Mark Zuckerberg owns less than 20% of Facebook, but how wealthy are they, right? They have to borrow money to make money. So rich people took money. Of course, they're buying real estate or they're putting in stock market. It seems like it's a stock market because they say right now margin accounts are at the highest level than they've ever seen, right? So everyone who is borrowing money, who are putting money into margins account and then borrowing on margin, right? All of a sudden now the bank's like, we're either cutting it off or we're not loaning it out, right? They feel that in the stock market, it is leveraged too high, okay? So because they're borrowing so much on margin, if a domino starts falling in the stock market, it would cause a collapse, right? That means if these stocks that they bought in, right, if they came below market value, right, the stocks drop, right? They do a margin call, which means they have everyone, hey, it's time to pay up, right? You're taking too big of a loss. How much of a loss you have to take to pay it up? I don't know. Every account is different. But typically, if you're borrowing, let's say you have 100 grand in there in profits, right? All of a sudden it dropped to 80 grand, or your whatever you have drops to 80 grand. That means you're short 20 grand. They can say, hey, we need a margin account to make up the difference because we're taking too big of losses. Okay, so because I feel that inflation is skyrocketing, they're seeing how the economy plays out. The stock market can't boom like this forever. Everyone's borrowing on margin. Also, household debt is high. Right now, there's $11 trillion in mortgage debt, more than there ever has been. But remember, inflation. So that's why when you look at household debt, people owe so much more right now because of inflation driving up the value of money being borrowed. Okay, so with mortgages being at 11 trillion, right, a historic high. It's crazy how they stay at a historic high, but because of inflation, the number always keeps getting bigger. But no one ever mentions there's 33 trillion in home equity. So there's about only a third in mortgage debt, right? 11 trillion, even though there's 33 trillion in home equity. I mean, in home equity. So definitely right now the banks are, hey, before these dominoes start falling, let us cut it off right now with all the wealthy people borrowing money, right? They don't want to take any more risk. So that right there is causing a shift in what everyone's thinking right now, right? It's scaring people, right? So because it's scaring people, people are pulling their money out. When people pull their money out of the stock market, guess where they put their money? Into real estate, into an asset that either can sit there and wait out the times, or keep growing, right? So that's why you see right now Blackstone, a lot of these companies, right? They're buying up properties cash. They don't care where the price is at. They're moving their money into real estate right now. So it's causing a shift, right? This shift is huge right now, right? People are going, the biggest, I think one of the biggest fears right now, if the stock market crashes, will the housing market crash, right? That's the biggest thing. If the real estate market crash, will the housing market crash, right? That we do not know because we don't know what is the effect. So right now, if the stock market crashes, it will affect a lot of retail, right? A lot of retail businesses. But as we can tell, as we saw during the pandemic, right? These bigger companies were able to survive. Not all, but a lot, right? But these bigger companies, they already didn't, the employees were already gone. So if people are like, hey, if the stock market crashes, all these employees are going to lose their job, the housing market's going to crash. Well, during this pandemic, right? People who did lose their job, guess what? Were not homeowners. Not all, some were, but some were not. So one thing we cannot predict, right? With the change in the stock market, will it cause unemployment to go up? Right now, unemployment's at 5.9%. Okay. Before February 2020, unemployment was at like 3.7, 3.8. So we're only 2% away from being the lowest of unemployment that we've had in a long time, right before February 2020. So we do not know. Okay. But one thing I do know, they're making it cheaper to lower your costs right now. Even though the stock market is changing, if you are in a position to lower your payment, do it sooner than later. Why? FHFA just lifted the adverse ban, which means if you had a home and you needed to refinance, right? Guess what? They just made it cheaper for you to refinance. And because they made it cheaper, the feds could raise interest rates. But right now, we're at that perfect scenario. They lifted the 0.5% adverse fee. Rates are at a still all-time low. People still have tons of equity. Okay? So where the shift is happening, I think a lot of people are realizing, hey, something's going on. So let me refinance and lock into a low rate because I might decide to keep this home longer. So if you have more people who have more chances to refinance into a lower rate, to a lower payment, why would they move? Why would they let their house go? So there's more homes getting off the market, right? With this shift happening, some people are like, I'm going to wait out the storm. I don't want to sell because things are kind of rocky. How about getting to my next house? I don't know about increasing my payment. Let me refinance, lock into a lower payment, right? So a lot of people were able to go from FHA to conventional without waiting till they have 20% equity. They're dropping their payment, waiting until they have enough equity and the PMI will fall off, or they're cashing out, or to pay off a lot of debt so they can have lower monthly mortgage payments, or they might shave off years on their loan. These days, people I think are going to keep their home longer than they did back then, right? The average American would move 3 to 5 years. I think they're going to stay in their home a lot longer. Why is that? Property taxes are going up, right? As higher prices go up, property taxes are going up. So we're in this, like, I feel like real estate purgatory, right? Housing market right now, we don't know. So let me hold on to what I can, right? We don't know how safe the stock market is. People who don't own homes, not really going to do a lot for them, right? We're talking about the housing market right now, right? So but people who own homes, who have their money in the stock market, right? They might go, maybe it's time to pull out. Maybe it's time to put my money back into my bank account, or maybe it's time to use that money, buy more real estate. But wait, there's no properties right now. Actually, let me worry about lowering my payment. I think in the next couple months, people are going to try to refinance to lock into a low payment just in case the market crashes where they need a cheaper lifestyle, right? So some people I feel will pull cash out, pay off their debt. Yes, their mortgage balance will go up, but their monthly payment will go down, right? With the lifting of the adverse fee, with rates at an all-time low, with equity, it hasn't dipped yet. Not saying that's going to dip, but right now, if you have a chance, don't wait till you have 20% equity, right? What happens if you have 20% equity and rates are up? So why would you refinance? If you have an FHA loan, you're going to be stuck with MI with your higher rate. But if you go from FHA to conventional, you'll at least lower your rate, lower your PMI, lower your payment, and when you have the 20% equity, your PMI will fall off. And that, I feel that that's where shifting. A lot of people who are waiting out till they have the 20% equity might not do it anymore because we don't know. Equity might go backwards, right? Not saying that it is, but right now, if I bought a home 3.5% down or 3 or 5% down, I have 15% equity or 10% equity. I'm going to refinance to a conventional loan, get that lower PMI, get that lower rate, get that lower payment, right? Because if equity does go backwards, then I won't have that equity to refinance again. The adverse fee, Paul, is a fee that Fannie Mae and Freddie Mac were charging for refinance only. They said it was a risk to do refinance. I think Fannie Mae and Freddie Mac were trying to make extra money on the side, right? So they charge this fee. So if they bought your loan, they would charge you a 0.5% adverse fee. They charged it to all lenders. FHFA just made them lift it. Like, you're not charging this fee because you're whack. You made up this fee to pocket more money, right? So it lasted a year. So now that's lifted. Rates got dropped more, but it did tell the government now, hey, they can stop tapering, right? Because they can afford rates to go up just a little bit because they lift the adverse fee. It's kind of weird how that works, right? So let's get back into it. So now we know stock market. People are going to get scared, right? Will it cause unemployment? Right? I see if the market's gonna, if Armageddon's gonna come, it's gonna be because of stock market and unemployment. So what are people doing next? They're gonna position themselves. They're gonna shift into what? Let's not go gung ho right now. Let's lower our costs. Let me consolidate all my debt while I still have equity. Let me drop my payment. Right? Let me drop it to a fixed payment. Let me refinance into a lower, cheaper payment, or let me shave off years of interest on my loan by taking a shorter term refinance. So that's where I see the market shifting. I think the people who are just going to wait out the 20% equity is not going to do that. Also, I think that people who are out there going to buy, we're going to, you know what? Let me pull back. People who are going to upgrade, let me pull back, right? So now, where is the market going to shift? Is there going to be more people pulling out of the housing market to buy, which caused demand to go down? But also, a lot of people who are selling are going to lower their payment. They're going to shift into lowering their payment. Let me chill out. Let me wait it out. Okay. So that's where I feel a lot of things are going to shift. It was where people are going to decide, you know what, I'm going to stay here longer. How do I preserve my money? Right? We don't know what's going to happen. Well, there's going to be a bunch of foreclosures though, man. Right? Today, right? July 19th, forbearance has dropped to 3.5%, right? There's 1.75 million homes in mortgage forbearance. 150,000 homeowners left mortgage forbearance. They didn't go into foreclosure. They just started making their mortgage payment again, right? So at the end of July 31st, right, is when mortgage forbearance, or tomorrow actually, July 21st, mortgage forbearance is over. So I think if you went past your 12 months, that's when it ends, right? But if you haven't asked for mortgage forbearance, you can ask for mortgage forbearance up until September, and you can get it for 1 full year. So if you don't have mortgage forbearance, you can get it. But if you ask for it and their 12 months is up, your 18 months are up, it's coming to an end. Will that cause homes to hit the market? As we can see week by week, people are coming off of forbearance and they're not entering into foreclosure, right? Right now, with people deciding not to refinance, people are like, you know what, let me refinance and drop my payment, right? These homes that are going to hit the market, right? Will there be foreclosure homes? I think not. If they can't make their payment, they have couple different options. They can sell, right? If they cannot make their current mortgage payment, they can sell if they have equity. Right now, there is 2.6% of homes in the nation are in negative equity, which is 450,000 homes. But we don't know out of 450,000 who is not making their mortgage payment. Most of these homes are in the state of Illinois, Iowa, Louisiana, and Oklahoma, right? That's where most of the negative equity is at. So if you're outside those 4 states, guess what? Doesn't look like there's gonna be foreclosures, right? They can sell their home. So as people are coming out forbearance, they can either sell their home, they can do a loan mod, or they can refinance and pay it off, or just start making their mortgage payment again. So to see these people lose their home, I don't see that. Where I see the shift is everyone's gonna try to lower their cost of living, right? By either refinancing or just continuing on their payment. You just have to talk to a lender, talk to your current lender who holds your note, right? Find out what's the best position. So I feel this purgatory where a lot of people, because they see the stock market, are going to back off. A lot of people who are tired of overbidding, they're going to back off, right? So we just don't know. Well, there'll be more people backing out of buying a home or more people backing out of wanting to sell, right? So that's where I see things right now. I see things, it's in a weird place, right? Well, who wins? If enough people back out, will prices go down? Well, if enough people don't sell, will prices stay or go up, right? With the adverse fee being lifting, will interest rates go up? Now the feds have a chance, hey, we don't need a taper anymore because we can afford half a point. We'll answer everyone's question in just a second, Paul. All right, so I see right now where it's shifting is everyone's being conservative and preserving. So if you own a home, you're preserving. If it's worth buying to have a cheaper payment than renting, then you're buying, right? So I feel that everyone who's taking risks, I think the risks are going to calm down. That's where the market's going to shift, right? People are going to calm down. Doesn't mean they're going to lose their homes. They're just going to calm down on spending money in the stock market, maybe not selling, maybe not buying. We just don't know. And as the months go by, I will keep you guys informed, right? For some of those who think that market's going to crash, let me explain something to you. If you bought your home before 2019, your mortgage payment is cheaper than rent, right? In the area that right now you're buying, if you decide to rent that area, your mortgage payment is cheaper than rent. You can't count your cousin who's going to hook you up with some cheap rent or some old lady who doesn't raise rent. Typical, like the standard, right? Single family home rents went up 5%. So if you own a home before 2015 and 2019, your mortgage payment is cheaper than rent. Well, all the homes after 2019 are all going to foreclose. Well, check this out. 30% of homes, almost 1 out of every 3 homes bought in 2021 are paid in cash. 1 out of every 3. Also in the article, it will tell you in 2020, 1 out of every 4 homes, 25.8% of homes bought in 2020 were paid in cash. So you have these people who are sitting on properties cash, people who have mortgage payments cheaper than rent who bought before 2019. If we are shifting to a more conservative time, no more going YOLO on your credit card because the credit card companies, the banks are cutting you off, right? No more going crazy on spending, right? The only thing we don't see is unemployment. The people who are unemployed, do they own homes or not? We don't know. So some of these things, someone can give you opinions all day long, but we don't know. Out of all the unemployment, all I can tell you is that during pandemic, yes, there were people who went into mortgage forbearance, but they didn't stay that long, right? Once they realized they had to pay back the money, that they had to pay back that second, or they had that second, they're like, nuh-uh. A lot of people start getting off a mortgage for it, but we don't know how many people who lost their jobs were actually in forbearance, or how many people took advantage of the system. So we can't tell you how many people right now, all right, if this unemployment starts racking up, not saying that it is, right? Who owns a home and who doesn't? All I can tell you is that people have to live and pay for shelter. If you bought a home before 2019 and your mortgage payment is cheaper than rent, right? You're either gonna sell your house if you have equity and have extra money, or if you don't have equity, which is only 2.6% of the nation, you would let your house go into foreclosure. We just don't know those numbers right now. But like I said, if most people their mortgage payment is cheaper than rent, why would they let their home go into foreclosure and pay more for rent? That's number one. 30% of them who bought in 2021, they bought cash. 1 out of 3, right? In 2020, right? 1 out of every 4 paid in cash. So to see this market come crashing would be hard. I'm not saying that is impossible, but I see the shift is conservative. More people will start becoming conservative, right? Also, the people who actually have credit lines, who are all their accounts have high margin balances on it, right? And guess what? Wells Fargo cut them off. Citibank's not loaning, right? So the rich who would leverage money to become rich are slowly pulling back. They're going to stop spending. Will that affect retail and hospitality, right? During pandemic, retail and hospitality had the highest spike in unemployment. Did we survive? Yes. Yes, there was a lot of pandemic money out there, right? So with all that money being injected to the economy, guess what? We have to keep printing money, which is driving up the cost of life. Because the cost of life's driven up, I don't see prices coming down to some extreme number because we just printed too much money. Talk to anybody. I know there's some of you guys like, I can't wait for the market to crash. Guess what? If the market really crashed that bad, you are hoping the market to crash, it's probably going to lose your job too. It'll be all out Armageddon, which I think there won't be. There's more people with money in their accounts right now than you think. There's more money in the economy than you think because we printed so much. So with that, all that being said, I just don't see it. But one thing has to happen. Do you believe this or not? Comment yes or no. It's like, we need more houses. Vote for Minh for president in 2024, right? Say Wham 2020, or put in 2024, right? 2024. If I can become president, you know why? I would answer the builders' question. I would answer the builders' prayer. What do builders want? They need more houses. Okay? Can I get a 2024? We need more houses. Builders are urging the government to boost new construction. Builders themselves are afraid to build. New construction sentiment to build homes are down. Why? Because we printed so much money that cost of wages have gone up. So if you build a home and you're a new builder, guess what? Thanks, Gus. Thanks, Jazz. Thanks, Sound of Freedom. Thanks, Vince, right? They can't build homes. Even though builders want to build homes, they're scared. Material is up, right? Labor's up. So they do not want to build new homes, right? Yes, there's contracts out there. They can't build them quick enough, but they can't afford to. They need the government to come in and bail us all out and build new homes. Thank you, Daniel, right? That's what needs to happen. And they're talking about that, right? They're urging the government, come in, build more homes, because the builders, they're not taking risks. They're not going to go out there and like, let me build a home and take a lot, right? They're not. They're scared. They're nervous, right? So what do they need? They need Joey B to come in. Joe Biden, right? Joe Biden says he's going to take $213 billion for the housing market. He's going to build 2 million new homes, supposedly, right? When he builds these 2 million homes, right, will it boost the economy? We don't know. I mean, not boost. Will it cause housing prices to go down? People are becoming more conservative. People are going to lock in the low rate. They're going to be frugal, right? People are going to dump their house. We just don't know where unemployment is going to be. And people who are unemployed, do they own homes or not? We don't know these answers. But I can tell you, you will start seeing a shift, right? Spending will start dying out a little, right? After September, after the free money's gone, as inflation is rocketing, right? Is it transitory? We don't know. But all I can tell you, I feel, and this is just my opinion, but seeing all these signs, I'm just going on with you, fam, right? We're going to become more conservative. But will the government come in and build these homes like they said they are to bail out our economy? If they build these homes, will prices come down? Honestly, not to sound mean, I'm hoping prices do come down a little bit. All right? Give the little man like myself, other people, a chance. If you're sitting in your home and your mortgage payment's cheaper than rent, be happy. Be thankful. Let's help out the rest of the United States, right? I'm hoping prices flatten out or dwindle just a little bit, right? If you talk to most lenders and most realtors, they need prices to calm down. They don't need price to go like this. They need it to be like this, right? We have more buyers. Like, think about this. If you live in Orange County, if you ask a realtor how many $700,000-$800,000 borrowers they have, maybe 2, maybe 3. If you ask them if houses were at $500,000, how many buyers do they have in Orange County? Probably 20. So loan officers and realtors would make more money if prices were lower. So when a realtor and lender tells you prices are up, they're not bragging about it, right? It's up because of demand. They want prices to go down, right? But we need more homes, all right? So I think it's going to be a conservative time going 2021, 2022, right? I think prices will kind of cap off and flatten out because I think we have to be conservative because the stock market, it does not look good right now. It's like we're wearing a jacket and the seams are about to bust through. But will Joey B come through? But if he builds all these homes, right? If he builds all these homes, guess what he's doing? There's 3 acts. So it's like, it's very, was it counter, what do you call it, Andy? When something, he's building homes, it's counter, oh my God, I'm going blank right now. And counterintuitive, right? Like, he builds 2 million homes, but there's a grant for $25,000, first generation home buyer. There's a tax credit for $15,000. There's a Helpers Act that helps all first responders and teachers buy a home 100% financing. They're going to treat first responders and teachers like veterans, right? And they're going to be able to buy 100% financing, no PMI, right? So I was giving the people a market update. Matt, the mortgage guy, is giving the people a market update, my guy. What's that? Who's that? Matt, the mortgage guy, is giving. Awesome for Matt. Counterproductive. Thanks, Matt. So yeah, so that's where I think we're at right now. I think rolling into end of 2021, 2022, the signs are there, right? We need to see more signs still, but right now the bigger banks, they are taking away power from the rich from borrowing more money, which may pull back the rich from spending, which is trickle down. Will it affect the stock market? It will affect the stock market. Will it affect unemployment? We don't know. They're creating better opportunities to refinance, to lower your payment, right? I think more people will lower their payment instead of selling, okay? So I think there's going to be a conservative approach, but I'm hoping the government comes in and builds these homes, right? And I hope they build enough low-income homes, moderate-income homes to bring down prices, right? If that goes down, if your mortgage payment is cheaper than rent, be happy, right? So to remember, payments will continually rise. Even if prices go down, rates will go up. So if you're there going, oh my gosh, why did I buy that? Because the prices are going to dip. If you locked in a mortgage payment, your payment will not rise. But as prices come down, payments will rise with it, right? It will keep rising. Even though it's going to look like prices go down, property tax might be lower, but entry-level mortgage payments will keep rising. Okay, so that I feel is where the economy is shifting. It's shifting into a conservative time, right? I think the the YOLO, the Wild Wild West, all that is gonna be. I think there'll be a big reckoning. Things are gonna calm down, right? So that's where I feel the market's gonna go in 2021. Please, at the end of 2021, early 2022, please leave some comments. Let me go some Q&A. If you have questions, bring them on. What's up, Vince? What up, Gus? What's up, fam? What's up, Drea? Hi, Dad. How you doing? Love my dad. Chineri, thank you so much. Pachico, Monica, Torblanca, what's going on? What happens with Wells Fargo? Citrina, Wells Fargo cut off personal lines of credit. Not home equity line of credits, not personal loans, not credit cards. Personal lines of credit. If you are rich, you have money in the bank, you have good credit, good income, low debt to income ratio, they will get right now, we're giving you personal credit lines at low interest rates to go out there to do something with the money. A lot of people bought properties, right? And what they're collecting in rent was able to pay the interest. Or what they did was they put money in the stock market. That's why you look at the stock market, right? They are leveraged to the hill. More people are borrowing on margin right now, every recorded in history. To borrow on margin, you need money in brokerage accounts, right? There's a ratio you need for how much money you have in the bank to what you borrow. So a lot of these people took money out of their Wells Fargo account, their lines of credit, dumped it in brokerage accounts, right? So they can borrow more on margin on the stock market to make money. But they can tell with inflation skyrocketing right now, we don't know how long it's going to last, right? The Feds did not taper on inflation. So now they're like, hey, everyone's getting nervous because we're just borrowing too much on credit, okay? Household debt's high, right? A lot of debt's high. But remember that we have $11 trillion in mortgage debt ever recorded in history, but there's $33 trillion in home value. So that's what happened, Monica. Wells Fargo, I think, are like, you know what? We got to pump our brakes here. What up, Jacqueline? Thank you, Minh. You and your team are good teachers. Thank you so much, Jolene. What are you doing, Andy? Okay. Vincent, is it better to try and buy now since rates are low? It is better to buy with a higher price with a lower rate. If you don't believe me, run in an amortization schedule. Talk to any lender. Take a $500,000 home, put it at 3% interest rate, and take a $400,000 home, but put it at 4% interest rate. See how much interest you pay in 30 years. You'll see that you will spend more with 20% or with 10. Actually, that was 20% down. So on 500,000, let's say 3% interest rate, right? At 400,000, it would be at a 5% interest rate. You will pay more money in interest long term. If you add the interest and principal together, you will spend more, like I said, on a $500,000 home with 3% interest compared to a $400,000 home with 5% interest. Run the numbers, you'll see it. So it is better to buy, Vincent. You are correct. Red Door, shout out to Red Door out there. Thank you, Alberto, for using Red Door, right? If you are buying new construction, Red Door is a place for you. They're beating out builders, right? Alberto Zavala, win run, the president. We will all vote for you. Thanks. I would love to run. How bad is it to buy now? Kenneth, if you are not in a position to buy, do not buy. If you are in a position to buy and just hold on to it. If you are flipping, you might want to pump your brakes. If you're going to live in it, hold on to it long term, you will win in the long run, okay? Remember, if prices go down, rates go up, you'll actually spend more. What's up, Annabella? What's up, Horcio? What up, Paul? We explained the adverse fee. Is now a good time to purchase with 5% down? Sound of freedom. If you could get a house with 5% down, and right now, people who are overbidding are slowly starting to calm down, right? A lot of people are backing out. If there was a time for you to get it, it would be now with 5% down. A lot of people are going like 10, 20% down or 5% down, paying over asking price. If you can get it, all right? What question do you have on Terry on streamlines? If you have an FHA loan, I would not do a streamline. I would go from FHA to conventional, okay? Sound of Freedom, Mario was good. Ruby, we all had a refi, so we had to get off the forbearance, right? Yes, if you get off the forbearance. So if you're in forbearance, right? So let's say you miss your mortgage payments. Your forbearance comes to an end. You can either start making your normal mortgage payment again, whatever you owe. The banks aren't asking for it. They are not asking for it right away. It's going in the back, right? So because of that, you're fine. Just start making your mortgage payment. You didn't make a mortgage payment for 18 months, right? If you didn't make one for 18 months, you either did not work, which I get, you got 18 months to find a job, get back to work. If for some of you who couldn't get back to work, I'm sorry to hear that. But most of us, we could have gotten back to work, right? But also, you didn't make and if you did work, you didn't make a payment for 18 months, right? You have all that extra money. That's number one. Number two, you can refinance, use your equity, refinance, pay off the difference, and drop your rate. Or number three, they're going to roll your first and your second together and still drop your payment if you stay with your current lender. There's a lot of things that can happen, all right? Can I do a cash out with a higher, my monthly, if you do cash out, it can bring up your balance. If it brings up your balance, it can bring up your payment, right? So it all depends. You got to do the numbers. Yes, let's say you do a Paul Farida, right? Let's say you've had your loan for 10 years and your balance goes down, but you do a cash out. But if you stretch it over 30 years again, your payment will drop. But you might pay more interest because let's say you're 10 years in your loan, you have 20 years left. If you go back to a 30-year fix, your payment will drop, but you're adding 10 more years of interest back to your loan. You can do a 20-year fix, right? If you do a cash out, you might not save as much. Your payment might go up. It all depends. Best thing you can do, Paul, DM us, reach out to us, and run the numbers. Give us a call, 714-790-9697, or email us, info@what'samortgage, or message us. Paul, if you want to see if is it worth pulling cash out or how much, or how do you pull cash out and still drop your payment, reach out to us, all right? DM us, message us. As always, you're welcome. Bank of America ends credit card COVID forgiveness August 15th. Yes, all this free money is about to end, right? All this money is about to end. Remember, guys, also, right now we have unemployment's at 15 million, right? I think it's like 15 million. Do you know there's 10 million jobs out there that people don't want to take, right? Oh, because they don't pay enough. People are making more unemployment. That's just keeping it 100, right? People are making more unemployment benefits. But when that's gone, people are going to take these jobs. You will see unemployment drop. But when people go back to work, will they beat inflation? We don't know. That's what everyone's afraid of. With everyone working, the way inflation was, right, their income is not enough. That might cause a little bit of a domino. But will it affect homeowners or non-homeowners? We just don't know, all right? Interesting to see this shift soon. Yes, Angelica, I am definitely waiting to see what happens. Thanks, Vince. Thank you, guys. See here. Stop building these $650,000 can't afford. Vincent, they're not building $650,000 homes, right? It's just the cost is up right now, right? Builder sentiment is down on building homes. When's the best time to buy? Jesus, if you're buying long term, it's always a good time to buy now. If you're gonna flip, no. If you're gonna live in a home more than 3 to 5 years, which most people are, it's good to buy now. Okay? Why is that? If prices do drop, rates will go up, which would make your payment more. So it's always good to buy if you're going to keep it long term. All right? What's up, brother? Why are you on so late? We started 10 minutes late because something was wrong with our slides, but we fixed it. What's up, Matt? Hopefully you're having a good night. Michael Clover. Matt, mortgage brokering, right? I've been dipping into that, Matt. Hit me up. I'll tell you my experience so far. Jesus, if you can qualify, afford to buy now. That's right. Linda, hi, man. If the market does shift, do you think prices will go down in San Diego? No. It'll stabilize in San Diego. San Diego, LA County, it's becoming New York. It's an established area, right? Think about New York prices, right? Even though with all this happening, like a 900 square foot apartment is still over $2,000, right? San Diego now, LA County, Orange County, it's established. That's why too many people live there, right? If you want to go with low, cheaper living, you're gonna have to go inland more, right? As you see, people are starting going inland more. Idaho, Arizona, Nevada, right? Businesses will start opening out there. As you can see, Tesla, Apple, they're all opening outside of California now, right? But it's established. It's really not gonna go anywhere. Hopefully that helps you out there. Yes, we need more inventory and market needs to normalize. Nita, I'm 100% with you. Sometimes I see a lot of trolls or a lot of people talk smack to me because I talk about how hot the market is. I'm telling you how hot the market is so you can lock in the cost of housing. I'm not telling you how hot it is to rub it in. I want you to know I would love prices to go down. I have more buyers and more clients waiting to go into escrow. But with that many people we have waiting, it would be hard to bring the market down because we have that many people waiting. If unemployment does rise, do these people lose their job? We don't know. Those are things no one knows. Everyone's giving their prediction on something they don't know. All I can tell you is if their mortgage payment's cheaper than rent, if they have a job or don't, they're going to fight to keep that, to make that mortgage payment because it's cheaper than renting. If they bought their home free and they have no mortgage, 38% of homeowners don't have a mortgage, right? And 1 out of 3 are paying cash, right? If the market shift, they just sitting on there. They ain't got to do anything. They don't have to do anything. If you don't see lumber on RX8 cars, that means homes aren't being built and the economy's not doing good. If I'm a first-time generational homeowner, but my wife is not one, do I still qualify? No. So for Biden's first generation, both people who are buying the home, their parents could not own a home after they were born. Okay. What?
So leave the wife off the loan?
Oh no, when you file your taxes, they'll know.
Oh, okay.
The government will know. How do I get around PMI with less than 10% down? PIA, you can go 5% down and use 2% to buy out your PMI. You won't have PMI anymore, all right? You do something called single premium private mortgage insurance. I want you to know, PIA, I would get that PMI. The payment's cheaper, and in 3 to 4 years, it will fall off, right? If your purchase price, let's say, is $500,000, buying out the PMI is going to cost you between $10,000 to $12,000, right? To save what, $200 a month? Typically, you would take the 10 to 12,000 divided by $200. Let me see. Let me do this here. Let's say I just don't know how much your PMI is, but for example, let's say your PMI was let's say it cost you 10,000 to save $250 a month. You would need to keep that loan for 40 months to make it to be worth paying out the PMI. Typically, people will keep their first loan to 3 to 5 years, so it might be worth it. Run the numbers. If you're in San Diego, LA County, or Orange County, or in a metropolitan area or condensed area, do not buy out your PMI. I did, and I regret it. My wife made me do it. She wanted safety. Guess what? We got 20% equity. It's been a year. August will be a year we owned our house, right? And we almost got 20% equity. And we paid, I think, like 14 grand to buy out our PMI. 14 grand. Our PMI was, I think, like $400 a month. That's $4,800. I paid 14 grand to save $4,800. But if she asks you, I didn't bring that up. You know, guys, no, don't bring that stuff up, right? Seriously, Andy, she watches this, delete this. What is the cutoff amount of debt that you can't count towards your DTI? I don't recommend you go over 40 to 45% debt to income ratio to be safe. Annabelle, hi. You said there are bills for teachers are approved 100% financing. It's called the Helpers Act. It is not out yet. Okay? It is not out yet. It is a bill that they're looking to pass, but it is a bill. So right now, the 3 Biden ideas, right? The first one, the grant for 25 grand, it's not even a bill. It's on a piece of toilet paper. Not to be mean. So I wouldn't bank on it yet. He might hold it in his back pocket when he runs for 2024. I don't bank on that one. The $15,000 tax credit, that's a bill at Congress. That can be signed off anytime soon. Same thing with the Helper Act. All right. Hopefully that helps you guys out. As soon as it passes, trust me, I'll do the caw, let you guys know it's home buying time. Mnet refinance. Rates drop today lower than it has in the last 4 to 6 months. Mnet, call your lender, give us a call or text us 714-790-9697, right? If you want to shop your loan or you just want advice, or call your current lender. Lock that thing in ASAP. What info can you give me on VA loans? What info are you looking for? Please definitely reach out to us. ASAP Cassie, right? 714-790-9697. DM us. We can send you our VA pamphlet. I think we have our OK USA booklet we can send you, Cassie. So please DM us and we will send you a copy of our booklet. We need to update some information on it, but most of it hasn't really changed too much. We can send that to you, Cassie. Please DM us, all right? Send us your email and we will send you our OK USA book. If you don't even see Bloodsport, you know. If you know, you know, right? Debbie, what is Red Door? So Red Door is a company. You can Google it, reddoor.com, right? They are a no human, all systems mortgage company, right? If you are buying new construction, they're going to beat out most of the deals. But when you go with them, you better have a layup loan, right? Their system, be honest with you, I love them. They're great people. The owners are great people. Shout out to Ali and Heather. Their systems are not built yet to handle purchases at some great level or tricky files. But if you have a layup file and it's new construction, they're beating out builders right now, okay? If you want more information, Debbie, DM us or give us a call. DM us Red Door. We will send you more information and we will let you know, is it worth going through Red Door or not, all right? Elias, 0.5%, the standard adverse market fee refinance, it was pretty much standard, right? Up until yesterday, the 0.5% it was standard for all Fannie Mae, Freddie Mac loans. Okay. Event, we got out of forbearance, but we found out our lender gave us a second loan. Yes, that's what happens. They give you a second loan. We got out of forbearance, gave us our second loan. Our debt went up now. Yes. So when you get your second loan, it's the interest you didn't pay. They're not tacking extra interest. So the 6 or 1 year that you didn't make your mortgage payment, remember, when you make a mortgage payment, there's interest and principal. That second is the interest that you did not pay. It's not additional interest. It's just the interest you didn't pay when you were every month when you make a mortgage payment. A certain amount of it goes to interest. A certain amount goes to principal. The interest, it's what the second is. Okay, hopefully that helps you out. See here. I thought you were in Fayetteville. No, I'm not. Linda, wow, I'm glad I bought in 2019. Right, Linda? Linda, can I get a witness? Did anyone buy in 2019? Their mortgage payment's cheaper than rent? Let me know. Yes, Navy does have a 100% financing 30-year fixed loan. It's no PMI, but you're taking the higher rate, Ryan. So these loans that have no PMI, 100% financing, you're taking a higher rate to cover the PMI. That's just the truth. But not saying that's a good loan. But if you run the Navy Fed against a Cal HFA, the Cal HFA will beat out on the payment, even with the PMI. All right? Best thing you can do is run the numbers. All right, Yesenia? But I'm not saying it's a bad loan, Ryan. To each their own. So is this smart to buy now? Yesenia, if you're going to keep it long-term, buy. You're welcome, Pia. Yes, I'm seeing prices drop. Where are you seeing prices drop? Let me know. I want to know so I can tell these people. Europe makes sense. Thank you so much, Pia. Is it possible for a lender to consider overtime as income if it's not inconsistent? If it's not consistent? For a lender to consider overtime, they want a 2-year history that you've had overtime. Majority of my overtime towards the end of the year. As long as you have a 2-year history of it, and it's consistent, you have a 2-year history, they can use it. Doesn't matter if it's inconsistent time, but if you have a 2-year history and your employer put that your overtime kicks in at the end of the year, then they'll let you use it. Hopefully that helps you out. Listen to this at 42 minutes. All right, thanks. See here, I'm currently refinancing 3.75. Ryan, I've had my mortgage for 5 months. I would definitely look into under 3% right now, Ryan. I would not take that the 3.125 unless you don't have smoking credit. Different story. If you have above 720, 740, make sure you get that under 3% ASAP. I keep getting letters in the mail after getting a home 7 months ago. Yes. If you have a home, you bought it 7 months ago, if you have an FHA loan, go conventional right away. If you have a conventional loan, refinance with a cheaper, with more equity, you have cheaper PMI, lower the rate, and when you have enough equity, your PMI will come off. So I would do it with it so you can get the cheaper PMI and start attacking the principal, okay? But double check the cost first before you do it. Make sure it's worth it. In contract for a new bill, my current lowest, the current 680, want to go conventional, but I have a few questions. So Gretchen, if you have a 680 and you buy new build, if you have time, what I would do is I would add myself to a family member or a family member's trade line, which has a high limit, low balance. When they add you as an authorized user, it doesn't affect your credit score, right? There's no hard inquiry, but it will bring up your credit. Number one, I'd do that first, if you can do that. Number two, look at your debts. What debts can you pay down? Have your lender run a what-if simulator, see what debts you can pay down to increase your credit. Also, if you have a credit card that you've had it for a while, ask for an increase. Hard inquiry will affect your credit, but a higher limit, lower balance will actually improve your credit. So credit payment history makes up 35% of your credit. Utilization makes up 30%, right? Inquiries only make up 10%. So chill out, or 15, 10%, right? So chill out on it. I'm currently refinancing, okay? San Diego in the house. Ryan, send me your loan estimate. Email it to min or info@whatsamortgage.com. Let me look at this loan estimate. Leave your number. I'll review it and I'll send you a feedback on it. All right, Ryan? If you got a loan estimate, you want us to help you read it or beat it, email us that loan estimate, send us your number, and we will call you back, right? I've seen some good ones out there that we can't beat, but I've seen some boo-boo ones. 50%, how soon can I get PMI off? Or go for broke and put 20% down? Gretchen, I would put 10% down. Honestly, I wouldn't do the 15. I would put 10% down. You'll be fine with 10%, girl. The PMI will be pennies on the dollar if you got good credit. Watch. Gretchen, run the numbers. Actually, can we pull up something for her? on can I pull up a website? Can I pull up the website really quick? A techie lender. All right, let me Gretchen, shoot me your scenario. Let me go over it, right? I bought in April 2020. My monthly mortgage is still higher, even though rates are good. My taxes is too high because of my price of my home. So if you bought a home in a high area, right, in an expensive area, you bought in 2020. I said 2019. Has your PMI fallen off yet, Glee? Let me know. Has your PMI fall off yet? Once you have no PMI, it should improve your mortgage payment, okay? Gretchen, let's take a look at it, okay? Give me a purchase price, Gretchen. Shopping for good rates. We are planning to buy out of state of investment. What's a good, let's see here. I'm gonna pull this up really quick, right? So let me do this really quick for, let me answer these questions. I'll go to Gretchen. I'll wait for you to throw up the numbers. Let me read this really quick here. So, see, shopping for, we are planning to buy out of state. What is a good rate for investment? Right now, you can still get, if you go 25% down, you can get under 3%. If you go over, if you're only 20% down, you can get low threes. I got a VA is a rate, if it's conventional Glee, that's a good rate. Is that conventional? Hopefully it's conventional. If it's FHA, that's probably why your payment's so high. Is it conventional? Gretchen, I need that purchase price. If I refinance and PMI comes off, can it ever come back? No. Jose, if you remove PMI, it cannot come back. Thank you so much, Restream. Isn't the rate directly correlated with the equity of your home? Not just that, but also it correlates with your credit score. 5260, right? Let's look at this. Let's look at it. Look. Gretchen, what's your FICO score? No debts. What's up, Melissa? Gus, do you recommend going with a school first home loan? They offer a 5% down without PMI. Gus, send me the loan estimate. Let's run the numbers. All right, let's look at Gretchen here. Let's go to this calculator really quick. So let's look at Gretchen. Yeah. So for Gretchen here, right? 740 credit score. What was the purchase price? 526,900. Okay, 526,900. Rates right now, let's say 2.75, right? Let's go 15% down. 15% down for her. Right? Automatic this. Let's calculate property taxes, right? Property taxes are already there. Let's calculate PMI. So if she put 15% down, let's see. Oh, dude, this thing's. All right, let's say she put 15% down right here. 15% down. 0.19. Let's say 0.20. So it'll be 0.17. So 0.17. So 0.17. So check this out. So Gretchen, you put 15% down, your payment's 2506. Okay? 2506, right? So 2506. What was it? What was the purchase price? So 52,6,900 times 5%, 26,000 bucks, right? Or do you go 20% down? 2335. So it's 100 bucks, right? So about 170 bucks. So $26,000 or save, right? There we go. Go back to the thing. $26,000, right? Out of pocket to save 130 bucks. So it's up to you, right? You decide. Do you want to save 130 bucks a month, right? Or 100, I think it was 130 bucks a month. Let me see. 2335. 2335. Let me see here. 2335 minus 25 minus 2506. So $171. So you got to ask yourself, Gretchen, right? Property tax. Property tax. Well, I'm not gonna do the property taxes. So the difference of payments is 171 bucks. So $26,000 or 171 bucks. So $26,000 divided by 171. If you kept that loan for longer than 152 months, then the 20% down would be worth it. But remember, you would put that 50% down in a year and a half, the PMI would fall off. You'd have 20% equity, right? So do you want to tie up 26 grand is what you want to ask yourself. Do you need that money to do something with it? That's what you got to ask yourself. You're welcome, Gretchen. Guys, Let me know. Did I bring you value tonight? Did I help you understand the market? Did I help you, give you clarity? If I did, do me a huge favor. Save this video, share this video, and like this video. And if you watch this part of the video right now and you haven't followed me, definitely follow me on YouTube, all right? Definitely follow me on YouTube. Follow, and also follow us on TikTok, trying to grow that page. MNET is 2.5%. Take that loan, MNET. I think you might be able to get 2.25, but take that loan at 2.5. That's a good loan. 2.5 is a pretty good loan. You might be able to get 2.25 though. I think. I have to look at the full scenario. If you want us to shop it for you, definitely reach out to us, okay? Let me see here. What did Glee? Yes, I refinance conventional. Dropped my PMI 2.75. I saved $250 a month. I don't think I would ever be able to go down any lower until I pay off my principal. Well, think about this. Wherever your home is at, every year you're going to go up between 3 to 5% in rent. So let's say your mortgage payment doesn't change, but your rent will. In time, as cost of housing, cost of living keeps going up, your income will go up as well because of inflation. They would have to pay you anyways. So if your mortgage payment, Glee, is locked in, you bought in 2020, you've owned your home for what, a year? You can't expect 1 year. You might have to wait 2 years, maybe 3 years, right? It all depends on where you bought. But majority of Americans who bought their home before 2019, their mortgage payment's cheaper than rent because rent has inflated, right? So if you don't think it's a good deal, Glee, sell your house then. Sell your house and go rent and pay cheaper rent if that's what's best for you, right? But that's the best thing you can do. If you're not happy with your mortgage payment, you bought in 2020, I'm sure you have enough equity to sell your house and go rent somewhere, right? Hopefully that helps you out. Gretchen, so if I can put 50% down, I can get the PMI off. If you put 15% down, your PMI should come off in about a year and a half. All right. Thank you so much. Miriam, does having more money on the bank help to increase your amount of your loan? No, it's all tied to DTI. Having less or no debt helps the most. Okay. You're welcome. You rock. Thank you so much. Guys, I appreciate everyone who watched, liked, and shared. If you haven't done that right now, do me a favor. Last time, save this video, share this video, and like this video, right? Tag a friend in it if it helps you out. It helps me out if you tag a friend, all right, guys? We want to end all our episodes with our attitude is gratitude. Without you, there would be no me. So thank you guys so much for everyone who watches and supports the channel.